Q4 2020, the big picture article deals with debt, global debt, and why it's important currently. And just in terms of the size of debt leading into 2020, it was 322% of global GDP. So 3.2 times the size of global GDP. And by the end of 2020, this is expected to be 350%, unprecedented over the last 70 years. What's most interesting about it is that it covers both governments, households, and corporates. So we're fully indebted across the system. Why is this important? Well, firstly, we've never been in an environment with such an extended level of debt. And when we've looked back over time, there have been 3 debt waves since the 1970s. Each one of these has ended in a market correction, and in each instance, we've seen between 8 and 10 years of low economic growth after the unfolding of a debt crisis. So how is this crisis, or how is this debt bulge different to the ones we've seen in the past? Well, firstly, previously, the debt waves have all been regional. So they've either been in South America, in Africa, in the Pacific. This one happens to be global. So that's the first point. The second one is it crosses all sectors, households, governments, and corporates, which is quite different to previous debt cycles. Thirdly, it's the largest by far that we've ever seen. Also, the way the debt has to be handled, we're not growing at a rate that can outgrow the debt that we've created. And I think that's a vital point, that we are basically borrowing from the future in terms of our consumption patterns. And what's very important too is to understand that interest rates are at particularly low levels. So governments are losing the instruments that they need to cope with the debt. So we certainly have a very specific situation that the world hasn't faced in the past. So how do we deal with this at North Star? Well, I think firstly, it's critical that we own high quality companies that can sustain themselves through this cycle as they have through previous cycles. Secondly, that we buy businesses with robust balance sheets that aren't highly indebted. Thirdly, that we don't operate as if there's a constant fear in the background of a debt of crisis unfolding. We've got to look at the facts in front of us and understand that the market's dynamic, realizing that there is a big risk in the future. As an example, right now, markets are doing really well and valuations have been very cheap in South Africa, which we've been saying consistently, and it's important to take advantage of the situation that's unfolding in front of one. And then lastly, just to position portfolios for clients across different asset classes, across currencies, and to avoid extended areas with the exaggerated pricing, overpricing of assets, and to be conservative in the way that we actually value companies.